Welcome in, folks. Got a lot to get into in this one here today. At the top of the video, we're going to do some stock talk. There's some unbelievable moves going on out there. Lululemon stock just hit down over 50% in 2024 so far. Absolutely incredible. So we're going to talk about a bunch of stocks, what's going on in the market out there. Then I want to react to four little clips here. One is Tom Lee. This is the longest clip of the bunch we're going to react to. Small caps could rise more than 15% in August. Whew, that's a big call. So we're going to go ahead and react to that one. Then this little 1 minute clip here, Royal Caribbean, which is obviously a huge cruise operator, pretty much the biggest. Shares fall despite Q2 beat. We'll talk about if there's opportunities in relation to those, let's call it cruise companies, right? Southwest profit falls 46% as airline takes urgent steps to increase revenue. What a disaster. And then we got American shares drop 7% on weak profit forecast after backfired sales plan. I mean, the airline industry is a mess right now, and yet travelers are at all-time highs. This is incredible, right, to see something like this. Like, you would think traveling's like dead right now. It's not. But yet these airlines are going through like the worst situation. It's incredible, right? All right, guys, appreciate you joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Appreciate each and every one of you for being here. As always, pin comment down there today. I'll put two pinned comments. One is for if you're looking to apply to join my private group. The second is if you're looking for access to 1000xstocks.com. I'll put both of those as pinned comment today, okay? So let's talk stocks here right off the bat. AMD down again here today. This stock's down about 32% just in the past few months. And AMD's in a weird spot right now because you're looking out there and you're expecting this company's revenue to kind of get moving in the right direction. And it really hasn't as of yet, but the belief is the revenue will eventually come, right? And you look at next year earnings per share growth, 87% expected. Next year revenue growth, 28% expected. Current year expected revenue only up 13%, which is not a very big number for a company like AMD, right? And keep in mind, a lot of that is coming in the back half of the year. So the numbers they've reported so far this year have not been very good as far as growth goes. Last quarter was pretty sad. The previous quarter was pretty sad in regards to growth. So it's in kind of a weird spot right now. But yeah, that stock just continues to go down and flounder here, right? Lululemon is shocking. Look at this baby. Look at that. It's crossed over 50% down for the year now at this point in time. Incredible. I posted on X a little while ago about this Lululemon situation. I said there's three major problems for Lululemon right now. One is they're trying to become a global giant like Nike or Adidas, but this is very difficult. 5 to 10 years ago, Lululemon was more of a niche brand, right? And so they're trying to branch out. They want males to buy the product. They want females to buy the product, right? And that's difficult to do. It's very difficult to do, right? And I was kind of talking about Nike's one of the only companies you could ever know of that is just as successful with males and females, right? And they'll sell you anything. You know, you'll buy Nike shoes, you'll buy a Nike hoodie, you'll buy Nike jogging pants, right? A Nike hat, you'll buy the whole thing. Whereas Lululemon wants to get to that place, but getting that place is tough. And sometimes you can lose your identity. And the identity of Lululemon has always been what? Yoga pants. And so their identity's really been always wrapped up in one specific product. So then when you try to branch out beyond that, sometimes you can lose your brand identity, right? And it's very difficult to kind of become a Nike, right? And so you compound that with the second point I brought out, which is discounting. So I don't know if you guys have seen, but Lululemon's been spotted at Marshall's. And this kind of went viral on some social media. My wife was actually the one that showed it to me. And that's bad news. Like, you don't want to see Lululemon and Marshalls. It's very damaging to your brand. You don't want to become known as a Marshalls brand, especially when you're selling $100 yoga pants. No, okay? The second reason is it can show that you're actually having a struggle with your demand, right? Because you're not going to sell into Marshalls unless you have your product's not selling, right? Otherwise you're going to sell it at full price. And the third point I brought up is inflation, right? Consumer been sliced and diced, 3 years of inflation, and to spend $100 on yoga pants is difficult now, right? And my wife, I was just talking with her, and she was showing me on Amazon, you can get a 4-pack of leggings. Maybe they're not as good as Lululemon, but they're somewhat comparable. 4-pack for $26. So therefore, right, that's tough, especially if the consumer's been sliced and diced by inflation. They're like, am I going to buy a 4-pack for $26 or am I going to buy one for $100? right? So, if you're a baller, you might say, okay, I'll get the $100 pair. But for a lot of folks, it's just not realistic right now, right? So they're in a real pickle. I'll say that, right? Ulta stock down again here today. That stock's now down 24% for the year. Ulta's valuation's looking, it's looking good in regards to Ulta, right? Now, the numbers might still be shaky for this next quarter or two, so don't get excited about Ulta's numbers in the short term. And so the stock could continue to have pressure. But as far as thinking about like a stock to buy the next 6 to 12 months, I think Ulta is a pretty easy one. But, you're still kind of going to go through a little bit of a tough period there, right? Honest, moving up. We're moving on up, right? This baby continues to move. We're now up 166% gain so far this year. I can't wait for their earnings. I cannot freaking wait for their earnings, right? And obviously with small cap season going on, and if Tom Lee's correct about his calls here in regards to small caps, the stock like Honest is going to continue to rocket. Next thing you know, it'll be a $10 plus stock, right? So we'll see, but I'm liking what I see there. Fubo, that stock's up very nicely here today. Obviously, it's had a brutal year, but the stock recently has started to come to life, right? If we look at a 1 month here, it's up 32%. So it's been a devastating year, but it's been a great month for Fubo. The deal just came through in regards to Amazon stealing away from Warner Brothers Discovery the NBA rights, right? So we'll see how all that shakes out. That's a whole mess in itself. RH stock up here today. SoFi stock having a good day. That one's up 4%. That one, remember, it's still been a bad year for SoFi, right? So at some point in time, SoFi could be a profitable stock this year. That's something to keep in mind. When I say profitable stock, business model is already profitable. But when I'm talking about profitable stock, I'm talking about like you're making money in the stock. And so we got quite a bit to climb here. So a lot of fun to come. Celsius having a decent bounce back day here, but you can't get too excited over this one, right? We'll see. I bought a couple Celsius last night at Target because I was just like, I hadn't tried the product in, I don't know, maybe a year or so. And so I was like, let me go ahead and buy a couple cans I want to try some more flavors, see, kind of what I think of it. I wasn't impressed in the past when I tried it, I can tell you that. So I was like, let me just, so we'll see. I got them in the fridge and I'll try them over the next few days. I can't drink a whole one in a day. I'll record like 100 videos. I'll be going insane, man, drinking all that caffeine. So I can't do that. But while I was at the store, while I was at Target, it was interesting. Another guy came over. He was looking at the Celsius products. So then I kind of walked away a little bit and I was like, I want to see what he ended up buying. So I kind of went down the aisle a little bit, acted like I was looking at some juice. And sure enough, he bought a couple Celsius. They had a deal there. It was either like 2 for $7 or 3 for $6 or something like that. So so Celsius coming back a little bit, but once again, that one's down so much. It's got a long way to go. Something that's going pretty good here is the Chipotle hedge. The fact that stock's red today on a pretty good day out there for a lot of stocks. And it's a pretty dang good day. And you would have thought this one would have a relief rally today, right? And so to see it down about 1% is ideal for my hedge. It's ideal. And it definitely shows people are very concerned about the future. And you listen to that conference call. I listened to that conference call last night for Chipotle. It wasn't good. And as the call went along, it seemed like at the beginning, it started at like the most bullish. And as the call went deeper and deeper, it got more and more bearish, more and more bearish. You got more concerns about margins, more concerns about the consumer. Comp store sales, they were talking about 6% recently, right? Which is way below where they've been at. They were talking about the roll-off of the menu price increases coming here very soon. So you had all that kind of factoring in. And I can just tell you, it's not good, and I think it's even worse than kind of what they're talking about there. But anyways, the last quarter was good, but it just sounds like things are deteriorating for them overall. If we look at safety stocks, not a lot happening there with safety stocks, which doesn't surprise me. Let's look at big tech here. So big tech, AMD, I mean, look at AMD's really the only stock red other than Microsoft here today, right? It's not what you want to see. And then you got IBM having a great day, Snowflake having a pretty good day, Salesforce having a pretty good day, Tesla having a pretty good day, right? Tesla's a bit of bounce back. Remember, that stock was down huge yesterday, so it's just a little bit of comeback there. NVIDIA doesn't make any sense. And when I say NVIDIA doesn't make any sense, what I mean is the fact that anybody would sell that stock doesn't make any sense. Listen, Google just is up in their CapEx even more. They're going to spend even more next year than this year. They're set. Like, NVIDIA's good for at least the next year and a half in regards to their numbers, right? Like I told you guys before, well, did my computer freeze? Like I told you guys before, in 2026, 2027, that's a question mark. What happens with NVIDIA in those years? But for the next year and a half, they're set. All these big tech companies, Google, Meta, all these guys, they're going to be spending even more next year than they're spending this year on CapEx. Most of that money is going to NVIDIA's pockets. So to sell out of NVIDIA, be concerned here, it doesn't make any sense as of right now, right? If their stock climbs to 150, 175, 200, it's a different story, right? But right here at 116, it just doesn't make sense. So don't be surprised if next thing you know, NVIDIA blasts higher. And, you got to understand, even during this massive upcycle, it's taken several breathers along the way, right? Pull up a 5-year here, and actually, let's pull up a 1 year. Oops, let's pull up a 1 year, and then let's back it out. Let's back it out a little bit. So if you see, this stock's taken plenty of breathers since it bottomed around October 2022, right? Took a nice big breather there, right? Took a nice big breather there. Took a breather here, took a big breather here, right? And now we got another breather moment for NVIDIA stock overall. But, to sell out of that stock doesn't make sense, man. Doesn't make sense. Not right now. There will be a time to cash profits on NVIDIA, but not quite yet, in my personal opinion. As far as EV stocks here today, that watch list looking very, very green overall. So that pretty much wraps up this part. It looks like, housing stocks, one last thing. Housing stocks, I thought about, when is the right time to start hedging back against toll? Oh, man, I don't know. I feel like it's not quite yet. I listened to Century Communities numbers, or not Century Communities. I looked at their earnings last night, right? Their earnings were really good, really freaking good from Century Communities. And so it's hard to bet against toll right now. There's going to be a time to bet against all these home builders, but I might need to let these guys kind of have a blow off top situation and then maybe come in the fall and hedge against these sorts of stocks. But right now it's a difficult process. Let's listen to Tom Lee speak.
A salve, and I think you're going to give us...
One other stock I was thinking about hedging against. Do you know what stock it is? It is Costco. So here's what got me interested in potentially hedging against Costco. The valuation is pushed on this stock. Forward P 49 and 2-year out forward P 44. That's insanely rich. But what do we know about whenever you're doing a hedge or you're betting against a stock? You can't just do it for valuation. It's got to be a valuation play, plus there's some sort of fundamental issue that's going to be coming in the company. And I just don't see a fundamental issue coming in Costco right now. And so for me, that makes it, I can't really hedge against the stock right now. And that's tough because it is pretty compelling. A forward P of 50? I mean, yeah, you compare them versus other names that are, retailers, it's like they're at a whole different they're trading at forward Ps that, let's compare them against Walmart, and then let's compare them against, which Walmart numbers growth has been very impressive, by the way. And then let's compare them against Amazon. And then obviously Walmart owns Sam's Club as well. Look at this. Costco's got a higher forward P than Amazon. Let that sink in for a moment. A higher forward P than Amazon. And Amazon's a way higher margin business than obviously Costco because of their Amazon Web Services side of the business and their advertising side of the business. So that's where you look at something like Costco and you're like, this is silly. But I got to have some sort of fundamental case to go against Costco. And I just don't have it right now. And so that's what keeps me away from hedging against Costco right now. But if I could find something fundamental that might be coming down the pipe for a Costco, then we could be talking. Because that valuation's wild on that one right now. All right.
A little bit of that today for our wounds from yesterday, but not entirely, because you think the S&P is probably going to be flat for August overall.
Yes, that's right.
And that's unlike some of your recent calls about the S&P with friendlier inflation data. You've made some calls about some big near-term moves. That's not what you're saying today, unless you're talking about small caps.
Yes, that's right. I think part of what we saw yesterday was, the rotation that's painful away from large caps. And I think Tesla earnings and Google sort of accelerated some of that. And I think there's been some uncertainty about the Fed's commitment to cutting, even though we expect inflation to fall like a rock. But when the Fed starts cutting, that's good for small caps. And there has been, I think, overseas, some unwind of that Japan carry trade that's hurt the NASDAQ. But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains. But now Russell 2000 has an 11 median PE, earnings growth 800 basis points faster. And, it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100% 1 month, 3 months, 6 months, 12 months later. 12-month average gained 40%.
You're very popular. And I would warn you, this is not good that you're saying this. You think this rotation has been driven by expectations of a Trump White House? Is there another way you can say that? Can you come up with something else so you don't have to delve into the political side? You think Trump's going to win the White House, or you think the market at this point thinks he's going to win the White House?
Yes, it's the second. Betting markets are putting a 65% probability of a Trump White House. The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
Okay, so that's the linkage.
Odds need to change. I'm going to be honest with you guys. Because I felt like that a few weeks ago as well. 65, maybe 70, maybe even 75% chance, maybe even higher than that. I would say 50-50 now. Trust me, 50-50.
That you're seeing that. So you really think we've seen a Trump trade? And even after, the betting markets have moved somewhat. He's come down. Vice President Kamala Harris has moved up a little in the betting market since the weekend when the news came out. You still think that that's at play from here on, not just to explain the rotation that we've already seen? You think it's going to continue? That's
right. So I think it's from this point forward, there's a lot of opportunity in small caps. Part of it is that there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks. It probably boosts CEO confidence, which is M&A, and that benefits small caps. So there's a lot of overlap between a Fed cut imminent and a Trump White House. And that's why I think the interplay is positive for small caps.
Interesting. So
I still don't understand. You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility. And they're not expensive. 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think investors are taking some profits up. NASDAQ was up 20% and putting it into small caps.
We were talking earlier, though, just about the Mag 7 in particular and the spending on the cloud. If Alphabet's results are indicative of what we might hear from Microsoft and Amazon next week when it comes to the cloud, where they are spending a lot more than they're able to bring in at this point, is that a problem? Is that because it feels like there's a little bit of a sentiment shift too? Even if it's a brief one and early on.
I agree. I think perception is really important for equity valuations, but the money spent by these companies on AI has a high expected return because they have moats that are getting stronger, and there aren't companies like this anywhere else in the world, so they're very scarce. So I don't think it's wasted capital, but if investors want free cash flow or if they see 11 PE stocks and small caps, that's what's becoming incrementally attractive.
So a flat S&P, but a Russell or a small cap gain of 15% in the month.
Yes,
possibly.
That's right. I think for the month of August, small caps can do something more than 15% even because they've underperformed so dramatic.
So basically 15% is his low number. Remember this. Everybody go on your phone right now or whatever you're watching this on and go into the notes tab and just put in Tom Lee says small caps are going to rise at least 15% in August, right? And let's just all remember that, and then let's come back to that. Because if he is, that's a genius call. But that's a big call to make, right? Especially when he's talking about 15% or more. So 15% is a low number there, right? That's an incredible call. Now, I have doubts about that. I have major doubts about that. Not that small caps could go up for August. I have major doubts about 15% plus, and here's why. If you look at the market historically, the market usually is not good in August, just generally speaking. Now, additionally, if you look at if you look at the last 4 election cycles, 3 of those 4 election cycles, the market downtrended significantly August, September, October, and then bottomed right before the election, okay? And I'm talking about 2008 that happened, 2012 that happened, 2016 that happened. It did not happen in 2020, but that was a very freakish year. Remember, we already had a stock market crash in February and March of 2020, right? So for the rest of the year, a lot of that was just coming back to life, right? The market reviving. That was a freak year. So I don't think 2020 is a very good year to look at and expect that to be the play out there, right? And so I think it's a potential the Russell could go up. I think it's a potential small caps could go up in August. Just to call a 15% or more is a little wild, given that it's August and given that we're in an election year, right? But I'll be a happy camper if that happens, because I can tell you, Honest, SoFi, those type of stocks, Fubo, they're going to be flying if that was to happen.
And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
Do you think that the earnings that we see for the big caps, will they continue to confirm your case that maybe could anyone blow their results out of the water and change this for big caps and say, wow, we're wrong, things are still okay, so that it doesn't? Because yesterday was 600, whatever it was, 600 plus points. That had a lot to do with earnings. Not completely. It seemed like it was ready to happen anyway. But do you think there will be any surprises that are better than people thought in that group?
I think so. I mean, at the end of the day, I don't think these companies are not capable of positive surprise. A lot of good news was baked in. You know, the line in the sand ultimately will be NVIDIA when they report, which is really the last one to report. You know, I think over the next 10 years, the outlook is still really good for all these companies. So I don't think investors should lose faith, but profit taking kind of makes sense.
That's okay, great. I think we can continue to have you back on because you've been so good on the markets that even that other stuff, maybe.
I don't know about that. But, okay, so if we go ahead and consider some of these techs, right? Meta, who we got coming here? NVIDIA, and then we can say Apple, right? Apple should be coming very soon. 3 big techs. So when you look at these stocks, Meta's looking really good into these earnings because valuation is very compelling, right? With that being said, though, Google had a very compelling valuation in their earnings, and obviously that stock has not done well post-earnings, right? So something to consider there, but we know Meta's spending a fortune. So I don't think that should come as a surprise to anybody, like when they come out with their spending numbers. And also, we already got Google's numbers, so it looks like advertising's fine right now. So Meta should be looking really good, and Meta has a lot of competitive advantages right now in regards to advertising market, new products that have been launched, and all types of things like that, right? NVIDIA is looking pretty compelling into their earnings because we know they pretty much beat and guide higher almost every quarter. Now, if they don't do that, then people might freak out, right? And then Apple valuation's a little rich, right? But there's a very high probability the company gets back to growth in 1 to 2 quarters from now, and then has a nice growth year in 2025 due to the bigger iPhone. Let's go Royal Caribbean.
In guidance today, our Seema Modi just spoke with the CEO, has more color on the quarter. Seema.
Well, Sarah, at a time that we're trying to understand the consumer, we spoke to CEO Jason Liberty. We're looking at the stock down, and he says the street has it wrong, the earnings report, and that reinstating the dividend for the first time since pre-COVID, that's a reflection of the strength that the company is seeing in the cruise market.
Wow.
I think somebody in my position would always say,
That's cool.
that we're worth a lot more money than what people are paying. I don't think we fully understand the reaction from the market because we handsomely beat the quarter. We raised the year. We raised the back half of the year. We reinstated the dividend, and our commentary around booking is exceptionally high.
Passenger cruise days were a bit light, and Liberty did mention that trends are starting to normalize.
What we are seeing across the board for 2024, we're seeing this as well for 2025, really strong demand trends. And we're seeing not just strong trends in terms of volumes, but also people's willingness to pay more. And so I think when we're looking at the balance of this year, we're starting to see some normalization because, our comparables to 2019 for the back half of this year are over 25% yield increase versus 2019.
JP Morgan
so that's
still
good, but he talks about 25% over 2019. Okay, but guess what? Everything's about 30% more expensive versus 2019. So that's just something to keep in mind.
Is Royal Caribbean taking share from the broader travel market, noting our parent company Comcast earnings call earlier this week, where management listed cruises as one of the factors causing visitation rates at its theme parks to normalize. We're looking at shares of Royal down about 2%, but still up about 25% this year, Sarah.
So if we go ahead and pull up, let's go ahead and do Royal Caribbean. I'm trying to remember Royal Caribbean's ticker symbol. Royal Caribbean? There we go. RCL versus CCL, right? CCL. And then Norwegian Cruise Line is a public company as well, if I recall, right? Let's see. There we are. Norwegian Cruise Line. Let's compare these companies together. So Royal Caribbean, about a 14 forward P roughly. CCL is about a 17. Norwegian Cruise Line about a 13. Then 2-year forward P, 11, 10, 9. So next year EPS growth expected. Royal Caribbean is expected to outpace nicely, and as well as revenue, right? And I will say Royal Caribbean generally has the more epic cruises. And when I say that, I mean really about the cruise ships themselves. Like Royal Caribbean has some crazy ones. Some like insane cruise ships. So that kind of is a good thing for their brand overall. But these companies do have a lot of room to kind of raise those net margins. But I like these companies actually as long-term investments. I think a lot of people are going to go on a lot of cruises this next 10, 20 years. Baby boomers are going to be cruising like it's nobody's business. So I do like those companies for the long term. They do have big debt loads, so you have to deal with that. And then obviously you have to deal with a little slower demand, maybe in recessions. But at the end of the day, with all these baby boomers, I'm telling you, man, these baby boomers are going to be cruising like it. You only got one life, right? You only got so much time here. So I'm just saying, like these baby boomers that have made good money in their life and have a lot of money behind them, they're going to be cruising like insane this next 10, 20 years. Next one up here, Southwest profit falls 46%.
Just out with its numbers, and Phil LeBeau has that report. Hey, Phil, what's this look like?
Hey, Becky, this is a beat on the top and the bottom line. In the second quarter for Southwest Airlines, the company earning 58 cents a share. The estimate was for 51 cents a share. $7.35 billion in revenue, just a little bit better than the consensus, $7.32 billion. Remember, they had cut their guidance for Q2 revenue per seat mile. It was down 3.8% in the second quarter, a little bit better than their previous guidance, but still a drop compared to earlier in the second quarter what people were expecting. Q2 cost per seat mile up 1.8% versus the second quarter of 2023. The big news this morning from Southwest, they are changing courses. Changing its course in terms of how it will handle its seating. Assigned seats will be offered starting in 2025. Premium seats will also be offered with extra legroom, and the company will be offering red-eye flights for the first time. And again, all of this starting in 2025. In terms of the company's capacity for the third quarter, that's what a lot of people are focused on. It is going to be up 2% compared to the third quarter of last year. And in the fourth quarter, capacity will be down 4% compared to the fourth quarter of last year. That's the drop in capacity that many in the industry have been expecting, not just at Southwest, but other airlines as well. The company says it expects to take delivery of 20 737 MAX 8 planes in 2024. They're contractually obligated to receive 58 for the year. So this is far fewer than what they originally expected from Boeing. Don't forget, we're going to be talking with Southwest CEO Bob Jordan coming up on Squawk on the Street. at 9:30 this morning. You do not want to miss what he has to say, not just about the second quarter and the guidance for the rest of the year, but this is a big change that Southwest is announcing in terms of offering assigned seats and premium seats starting next year, a change that few probably ever expected from this airlines, guys. But again,
the interview must have went well because that stock totally recovered, right? By the way, I'd love to know from you guys, if you fly Southwest, let me know in the comments section. If you fly Southwest, do you like that Southwest is moving to assigned seatings, or would you prefer it to stay the way it is currently, right? I'd love to hear from you guys in the comments section. I can see some people being pro this move and some people not wanting this move.
West for the second quarter, beating on the top and the bottom line. I'll send it back to you.
Hey, Phil, can we just talk a little bit more? Guys, show me a intraday chart right now for Southwest, because right now it looks like those shares are off by about 2.6%. I just want to look at the tick by tick, because you brought us the news earlier before the earnings came out about them changing and chart. Okay, it looks like the chart's not going to show us. The stock right now is down by about 3.4%. It picked up. Okay, looking at this here, you can see it picked up when they made that earlier announcement that you came on to talk about, actually assigning seats and selling and charging up for business seats. And then sold off after that. So I guess there are going to be a lot of questions about what to expect. Right now, down by 4.25%. Again, this is the knee-jerk reaction, but there will be a lot of questions associated with what's going on with those larger plans and also what just happened with the earnings.
Yeah, and all of this we'll be discussing with Bob Jordan coming up on Squawk on the Street. In terms of revenue generation, assigned seating and premium seats are definitely going to help the bottom line for Southwest Airlines. Yeah. But this is an adjustment, as you pointed out earlier. For 57 years, they've been doing business a certain way, and it's worked. Generally speaking, it has worked for most of those 57 years. Now they have to change course, and that's what they're doing.
Weird. It's a weird sort of admitting, almost concession, Phil, that we got to change. We got to change it in this world. And you know what? It's weird, Phil. So many other of the guys you interview, guys and gals that you interview that are running these companies, that they're not shy about saying, yeah, we're going to cater to people that have money. It's weird. We're going to have more of those beds, more first class, better lounges. In a time of where you're supposed to feel bad, I think, about being able to have all those things, they're embracing it almost.
Got to make money to run the business.
Bill. That's what I would say. The demand is there. And this is not a case where they have said, well, look, we're not interested in the basic economy market. Southwest still has tons of basic economy seats.
That's what Ed Bastian said the other day.
The demand is there for premium products. And you've got to meet that demand. If you don't, you shouldn't be running an airline. I mean, if the demand is there, you meet the demand.
Valid point. I'll give him that, right? Now, Southwest Airlines stock moving up, American Airlines moving up now, even though they're moving down. Something very important to always remember in regards to stocks that are having a major downtrend or crashing, whatever you want to call it, is stocks bottom on bad news. Remember that. Stocks bottom on bad news. And that's specifically in relation to stocks that are crashing or the market that's crashing. Either one, actually. And so you look at a Southwest today, profit down 46%. Oh my gosh, it's so bad, right? Don't be surprised if that stock actually bottomed today. Outside of a market crash, right, and where the market goes down a ton and brings down everything, outside of that scenario, don't be surprised if Southwest actually bottomed today. And it kind of trends higher from here over the next year or two, right? Because we got that bad news in and, profit down 46% and then moves up. So when I even think about something like a Chipotle, you look at the earnings, it was kind of good news, but could we get bad news in the next quarter, right? Or the quarter after? Maybe that's when the stock actually bottoms. But yeah, usually you don't bottom on good news, you bottom on bad news. Something like a Lulu, they've got to get to that bad news part of the cycle, right? American Airlines dropped 7% on weak profit forecast as backfired sales plan. And look at American ended up coming back. The stock was down 7% and now it's up 4.5%. Maybe this is another perfect situation where stock bottoms on bad news, right?
With more.
Hey, Joe, this is a beat on the bottom line for American Airlines in the second quarter, earning $1.09 per share. The street was expecting $1.05. It did fall short of revenue estimates. Quarterly revenue for the second quarter came in at $14.33 billion, just shy of the estimate of $14.36 billion. The metrics within the quarter: revenue per available seat mile down 5.8%. Cost per available seat mile, excluding fuel, down 0.1%, operating margin of 9.7%, free cash flow $850 million. And then there is the all-important guidance, and this is the reason you may be seeing shares of American coming under pressure. In the third quarter, the company expects its capacity to be up 2 to 4% compared to Q3 of last year. For the third quarter, it expects to be approximately break even. That is well below what the street was expecting coming into today. They were expecting 44 cents a share for a profit in the third quarter. And American is slashing its full year earnings guidance. It now expects to earn between 70 cents and $1.30 for the full year. The previous guidance from the company was to earn between 225 and 325.
What a freaking disaster. Are you freaking flipping my flapjacks on the floor? What a disaster. This is going to be one of the worst cuts I've ever seen in the history of EPS cuts. From 225 to 325 down to 70 cents to 130. Oh my gosh. That's horrible. But the stock's green. Maybe it just bottomed on, kitchen sink bad news.
To discuss with Robert Isom, CEO of American Airlines, we'll talk about where the company is in its effort to rebuild a lot of business that was lost as they changed the way that they were doing their outreach and reservations and business, especially with corporate customers. We'll discuss all of that with him, along with the company's new guidance. Again, a big drop in guidance for full year.
Wild.
70 cents to $1.30 profit is what they're expecting. Previously, we're expecting 225 to 325. Guys, we'll send it back to you.
Jeez, that's insane. Now, looking at valuations of these guys all versus each other, American Airlines certainly looks like kind of the best deal, but they just cut all their guidance, right? So that's going to have to be reflected in all these analyst numbers. So maybe it's not as cheap as it looks. Delta Airlines, pretty darn attractive. I got to say that, right? Everybody's expecting earnings per share growth to go, or earnings per share to actually go negative next year. And when I say negative, I just mean like down, not like the company's going to lose money or something like that. But interesting. So I don't know. If I had to pick one of these, I might go with Delta, although Love's probably going to have the most revenue growth opportunity here kind of moving forward, okay? All right, guys, appreciate you joining me as always. If you're looking to get access to 1000xstocks.com, you can click the pinned comment down there. If you're looking to apply to join my private group, you can do that as well. There'll be pinned comment down there. And we also have this portion in 1000x Education now. How to decode balance sheet, income statement, cash flow, SWOT analysis, strong moat versus weak moat, portfolio management 101, dividend investing, how to value a growth stock. I mean, these are phenomenal documents that teach you these sorts of complex subjects. Much love and have a great day.